All right, let's get back to Michael Cuggino here, fund manager for the Permanent Portfolio Fund, looking over the performance. We mentioned this before. You beat 96% of your peers over the last 5 years. I wonder what you think about sales growth, because you mentioned that you think the next earnings season will be driven by sales growth, and this is something that we've seen lacking over the last 3 quarters. Why do you think it's going to finally pick up now?
Well, I think we're seeing more and more indications that the recession is over. We'll probably find out in the future that it bottomed out in Q1 or Q2. We're seeing more anecdotal evidence and statistical evidence that the recovery is happening. And we're at the sort of we're seeing the classic signs of an early stage recovery at this point. Unemployment is declining as a rate of increase. That's normal. It's a lagging indicator. We're starting to see activity levels.
That as a rate of increase, right? Because
the rate of
before
increase.
I get 16 emails that say, that guy said unemployment's declining.
The rate of increase is declining. It's still over 10%. It's still a problem, but it's a lagging indicator. Firms are restructuring, creating more cash profits that they will further invest down the road, and that includes hiring more people. But that's further down the road. Incumbent on that is sales growth, and as activity levels pick up, as inventory levels pick up and reflate, sales growth should translate.
So, Michael, how do you take into account kind of an economic data point like we got to today, Michigan consumer confidence, that unexpectedly declined? I mean, consumers we know are so key to this recovery, yet they're still nervous out there.
They are, and if you have 10% unemployment, there's a lot of consumers not spending. But I think it's one statistic in many, and we're long-term investors. We're not focusing on any one statistic or data point in a given day, but looking at sort of what's going on overall.
Are you so sure that once the stimulus is backed off and once the Fed starts to raise rates, they ultimately at some point have to do it, I mean, that the economy will continue its recovery?
It's a very good question, because that's been asked frequently. What happens when the Fed decides to actually execute an exit strategy? I mean, they've talked about it, and talk is cheap, really. I've sort of been a contrarian on this in a sense that I actually think it would be good for the market, good for stocks, and actually good for the economy for the Fed to begin to do something, even if it's just baby steps in terms of draining some of the liquidity out. They've taken steps by terminating some of the special programs they've had to date, but I wouldn't mind seeing, in fact, I was a little disappointed they didn't potentially raise rates a quarter point back at the meeting a week or two ago.
Really?
I think from the standpoint of it's a concrete example that they see this as an issue, that they're taking steps to begin to work towards an exit strategy and actually executing it. I think the markets would take that as a positive, that they understand the decline in the dollar. It's serious. They're willing to work with it and begin to move us in that direction. So I have a little bit of a different viewpoint on that, but we'll see.
Do you think the inflation risk is stronger than, say, the risk of falling back down into another recession?
Currently, no, but I think in the future it is. I mean, we definitely have issues with a potential fallback, a continued bouncing around the bottom. There's a lot of slack in the economy right now, whether it's labor or capital. That means that I don't think we're going to have an inflation issue right now, but going forward with all that liquidity, we could very well. Stagflation concerns me.
Listen, we've talked a couple of times about your great performance and a long-term great performance, so I've got to get some names from you. Let's talk about them. BHP is a name that you like. It's doing really well this year, 71% higher. Why this name? There's a pretty wide energy universe out there.
Well, 2 reasons. I mean, commodities, I think, are attractive for a couple reasons. Worldwide economic growth, I think, hiccuped, but I see it as a long-term situation that's going to occur. We're seeing signs that it's reflating anyway. There's some of that.
I mean, mining universe, forgive me, yeah.
Yeah, I mean, BHP is really a diversified miner, many metals. I think it's primarily driven by a weaker dollar right now, as well as currency being created in a bunch of other industrialized countries. So that's why we're seeing commodities move, but there is the growth factor as well that should come into play. So 2 primary reasons there.
What about State Street? I mean, I get your point that they don't have the balance sheet issues that the other banks have got, but they also haven't had the incredible jump that all the other banks got during this rally. They didn't really participate as strongly as the other banks.
And they didn't get knocked down as far either because of some of the risk aversion. I mean, basically, State Street is an asset servicing business to investments. I mean, so they're providing all the services that investments and increasing in investments need. They're a very efficient operator. They restructure very well, and that provides operating leverage going forward. So we see financial services as being a very relevant place to be, and they're a leader in their field.
You talked about that name back in July with us. It's down, I think, a little bit, about 9% since that point. Is that a buying opportunity in your view?
Could be.
Could be.
Yeah.
That's all you're going to say.
We can't get into the specificity on that.
But you are a long-term holder.
We're a long-term holder. We like it long-term, and we notice moves in the stock up or down.
Okay.
And we're out of time here, but FedEx is one, and I just want to say it's a pretty bullish bet on the U.S. economy, isn't it?
We think economic growth is going to occur at some level, and FedEx, increase volumes, increase business services on the Kinko office supply side as well. I think it's a good stock for a recovery.
And it's rallied 51% since you talked about it back in July. Yeah, you've done well on that call. All right, Michael, thank you so much. Michael Cuggino, everybody.